Many thanks for making time with me on the marketplace today. Welcome back. Let's start with our very first story here. Former Finance Minister Seth Terkper insists that the erstwhile John Mahama administration was justified in sending Ghana to the IMF. His comments come days after the fund approved the exit of Ghana from its extended credit facility program, which provides financial assistance for countries with protracted balance of payments problems. The debate as to if the previous administration was justified in going to the IMF for economic assistance in 2015 seemed to be gaining some currency. But in an interview with Joy Business, former Finance Minister Seth Terkper says going to the fund at the time was a pragmatic decision to save the economy from crashing.
You have to be pragmatic if you are managing an economy. And contrary to what people say, one of the outcomes of Senchi is to go to IMF because the fiscal situation, particularly after we had calculated the liability associated with the single SPAD, and after we had seen the situation. Remember, back then we had a bit of drought and other things.
Yes.
When we had seen all of this, the pragmatic thing to do was to go to the IMF.
You had no choice.
Well, I said the pragmatic thing to do. You see, when you talk, yes, it was one of choices. You go or you don't go. Remember, I said that when we took over in 2013 and we did a homegrown with the assistance of African Development Bank, we thought we could manage. But then when you calculate the subsidy liabilities, when you calculate in particular the impact of lack of gas supply, and remember back then, crude oil was selling at over $100. We benefited from it and created a sinking fund and other things, which was the positive side. But remember, we were not getting cheap gas from Nigeria, and we had to buy crude for VRA, using our hard currency to keep the power running. Right. So the situation just suggested that you needed an institution to support the economy.
So those were the thoughts of former Finance Minister Seth Terkper. Meanwhile, news reaching us indicates that the IMF has indicated its preparedness to support Ghana manage its economy prudently. We'll be telling you more about that shortly. Before then, Standard Bank Chartered Global Credit Risk Boss, Rup Barua, is attributing the high investor interest in Ghana to prudent management of the economy. His comments follow the record $21 billion bids for the country's recent Eurobond sale, even when government was exiting the IMF program. Mr. Barua tells Joy Business investors are kind of convinced about the outlook even without the IMF.
Increasingly, investors are getting more and more comfortable with emerging markets. There was a bit of a hiccup towards the end of last year when there was capital flight from the emerging markets because there was a flight to safety. I think the market was way overdone. Fortunately, we are seeing a nice reversal in that. I think money is flowing back into emerging markets, and deservedly so. I think the fundamentals are looking better. Investors are getting much, much more comfortable, and that's been evidenced by just fund flows into emerging markets. So, in general, the outlook for emerging markets is very much positive. Of course, emerging markets are a very generic term, so it implies a large sector. There are emerging markets within that which may not be particularly conducive for investment, but that's a separate topic. Then there is Ghana. The outlook for Ghana, and you can see this from evidence in the markets, fund flows look very, very interesting. There is renewed risk appetite for Ghana risk. This was evidence in the latest Eurobond issue that the Ghanaian government came up with. There was significant risk appetite for Ghanaian risk. And this is just the Eurobonds. You've had sustained interest in your local currency bonds. More than 30% of your bond holdings are with foreign investors. That's a great sign of confidence. The market action for the new dollar issuances, the 3 tranches that you recently issued, saw lots of interest. In fact, the bond was, or the issuances were heavily oversubscribed. The bid to cover ratio was more than 6 times. So net, investor interest in Ghana is once again here, and we are very happy to see that as an institution, as Tenchart.
Let's also stay within the financial sector, because one of the major issues to be talked about during the 4th edition of the Where to Invest in Africa report breakfast meeting is the performance of the cedi. Celeste Falconer, the lead economist at the First Rand Bank of RMB Group, will help investors understand the cedi's performance so far with predictions of how it will close the year. The report will also assess the economic outlook and investment opportunities in Africa.
It's expected that once the Eurobond was out of the way, the cedi will probably make some gains, because notice that what happens is that once there's a shortage of supply, when demand and supply there's a gap, what happens is that people try to bring ahead even their needs, and therefore more sentiments and so on drives it very quickly. But once there's supply, people then take their time and they don't rush it, and then we have. So I think we've gone through that cycle with the success of the Eurobond and the clear knowledge that it now is resolved. Thankfully, I think IMF too has also released this
182 or 85 million.
Yes, also comes in. We also know that the government went in for a bridge to international banks. So the supply side has been resolved, and therefore what we will see is that the return to calm, and people will only access dollars as they want. So I think we've gone through the most difficult part. It's always the first quarter. We always have this happening in the first quarter. So I believe, I'm not sure whether we recover completely to the way back to where we started the year at. What happens is that when you go up like that, you notice that even when you recover, there's a little bit of it that you don't recover. But I think at the end of the year, we'll probably be hovering around the usual annual depreciation rate that we probably had expected. So what I'm seeing is that I won't be surprised if what we end up in April ending with will be the same or slightly higher when we get to December. So I think we may not recover fully, but by the time the year ends, we would have evened out.
What do you say to someone who say that, look, we're dealing with the symptoms, but we need to deal with the real issue? Because, I memean, some have even raised issues of government spending and all that with regards to the city.
Yeah, but that's true. I mean, it's because if it is a simple supply and demand situation, if your demand is higher than your supply, then you always have such situations occurring. And there are some particular times of the year where it becomes astute, particularly in the beginning of the year where people are paying Christmas bills, maybe dividends are being paid, and at the same time that investors were also going out and supply side was not working and so on. So it's going to happen all the time until we come to a situation where we have enough exports or enough FX being generated such that there's a match.
All right, so the fourth edition of the Where to Invest in Africa report breakfast meeting comes off tomorrow, Tuesday at 9 a.m. at the Movenpick Hotel. Let's move back to our earlier story, where the IMF has expressed its preparedness to support government to firmly stabilize the economy. This is despite the country completing a 4-year program that was aimed at restoring policy credibility. George Yafe has more in this report.
According to the IMF, this proposal has been influenced by the fact that Ghana is not cutting ties with the fund, but will still continue to have a relationship despite the program completion. They also want to ensure that gains made are sustained in the long term. IMF country representative to Ghana, Dr. Alberto Mamama, has been explaining to Joy Business what will be the level of support to the country.
The macroeconomic environment is better, that the prospects seems to be promising, including because of potentially improve revenues from oil, and that story seems to be important. But I think it's important to say that it doesn't mean that the vulnerabilities have all been addressed. I think this is a message that it's important to have, right? The work continues. The work have to continue. And there are a couple of areas where we think that, and I think that's a shared view, work needs to continue. If you think, for example, about domestic revenue mobilization, right? An important legislation was laid in Parliament, I think last week, on exemptions, tax exemptions. These are, legislation that may eventually bring enough, tax revenues and ensure that there is a fiscal space to, fund important government programs and if needed be, also reduce the debt stock. So this is an important area where more work needs to be done.
According to the IMF, the last tranche of the fund cash of $185 million would hit Bank of Ghana's account by the end of this month. The country in 2015 signed the Extended Credit Facility Program with the IMF to also try and firmly stabilize the economy and restore debt sustainability. But at the end of this program, have all these things been achieved? Well, time will tell.
Indeed, time will tell. Let's now turn our attention to the downstream petroleum sector, where some of the major oil marketing companies in the country have adjusted their prices at the pumps. Joy Business understands the move is to help them recover costs incurred as a result of the cedi's recent depreciation. The following report has the details.
According to the industry regulator, most of these major oil marketing firms were trying to deal with the huge cost of importing the various products when the cedi was depreciating sharply against the dollar. Some other players have told Joy Business they thought it was right for the consumers to take care of this cost, even though the cedi had started recovering strongly against the dollar. Our checks show that some of the major firms like Total, Shell, Allied and Puma have all adjusted their prices by over 1% per litre. Based on these increases, a gallon of fuel will now be sold at these service stations at around 23 Ghana cedis, 58 pesos, compared to 23 cedis, 45 pesos you were buying last week. Persons close to the industry regulator have told Joy Business that we should expect some reductions in the coming weeks due to the cedi's strong recovery against the dollar.
All right, so in a related development, market leader Goil has kept its prices unchanged at the pumps, and sources close to Goil say the cost incurred in importing these products does not warrant an increase. But I've been joined by researcher at the Institute of Energy Security, IES, Mikdad Mohammed, to also share his thoughts on this particular development. Mikdad, you're welcome to the market, please.
Oh, thank you very much.
Now, do you support, the OMCs to increase prices, especially when the cedi has recorded some impressive gains over the dollar in recent weeks?
Well, I think in the context of the pricing window, knowing that the pricing window started from the 16th of March and to go to the end of the month of March, the appreciation of the cedi came a little too late for the oil marketing companies who were procuring their product from BDCs and for BDCs who were buying from OTCs across the world. Even if the product was on the sea, when it has been transacted and closed, when the cedi was around 5 cedis, 60 pesos or 70 pesos, the appreciation will not have an impact on the trade which has been closed. But I know going forward, it will come to play when we look at the first pricing window of April 2019. But largely, for most of these oil marketing companies, I am aware that they have been complaining of depressed margins, that they have been competing on their own margins. They have not, especially for the smaller OMCs, most of them have been struggling to even break even because of the competitive nature of the market and the fact that they are depressing their margin to keep up with the level of competition the big players are playing along. So for some of them, the 4.29% depreciation, which was in the second pricing window of March, offered them an opportunity for them to cash in on the depressed margins they have complained about. And for Goil, Goil is largely is seen as a state player of a sort, and it must be seen to be showing the way when it comes to granting consumers comfort and the option of a relatively low price compared to the other oil marketing companies. And this will not be the first time that increments have developments on the market called for an increment and Goil did not move. It has happened in the past, and this will not be exceptional.
Now, I mean, taking Goil, like you're saying, as a market leader, if it refuses to increase its prices, is it not going to cause any intrusions in the downstream markets?
Well, when I look at the 2018 consumption figures from January 2018 to December 2018, Goil only did 16.68% of the market. The combined forces of Puma, Total, Shell did about 30.2% of the market. So that is why the local content policy was passed to see that how we can create more Goils, not just one Goil, but more Goils that are operating across the country, because the multinationals are increasingly dominating the market. So it is not actually accurate that Goil is them. Yes, they are doing very well. they're doing very well, but the multinationals they have a larger reach in terms of also the availability of outlets on the ground. What I know is that this offers us an opportunity to educate the consumer that you don't just walk into a filling station because it looks nice, or because it's a brand that you like. You must look at the price that is displayed so that you can go and buy in with the benefit of lower prices. Increasingly, people say, I'm just going to buy from a brand name, whether Total or Shell or Gold, without looking at the pricing. For example, I know at Santa Maria, Benab is just about 100 meters away from Guel. Benab is selling its fuel 18 cedis less, 18 pesos less. It means that if you are buying a gallon, you'll be getting about 60 pesos. If you are buying 10 gallons, you'll get about 6 cedis extra on your money. But because people just buy from brands instead of comparing prices, they just go to buying from the name of the brand. So yes, prices have gone up, but consumers have the benefit of buying from outlets like Gold and the other places that have very lower prices relative to other OMCs.
Quickly before you go, what's the outlook like? Because it looks like the commodity on the world market is not doing too badly as well in the few months. What should we expect?
I anticipate fuel prices either staying stable or going down because yes, the city has made some showing, and when this appreciation continues and the city continues to gain more strength, we anticipate that for the first pricing window of April 2019, even though as I speak to you, I know gasoline has gone up by about 5.5% and gas oil has rather seen a reduction. We anticipate that if the city continues to show very good signs of recovery and strength, we should be able to buy fuel at a less price or even at a stable price. This will force the oil marketing companies like Total and Shell, who have already run ahead of the market, to increase prices to come down to a level consumers can feel some little comfort.
That'll be some good news for consumers. Thank you very much. Sure. Mikdad Mohammed is a researcher at the Institute of Energy Security. He's been sharing his thoughts on the current situation where oil marketing companies, some of them, have decided to recoup the margins lost earlier when the cedi was depreciating badly. Away from that, the Danish Maritime Authority has picked Ghana as the safest maritime regime in West Africa. This was made known when the Danish Maritime Authority signed a memorandum of understanding with the Ghana Maritime Authority. The MOU, which marks the second phase of the maritime collaboration between Ghana and Denmark, will further enhance e-navigation in Ghana and support implementation of international maritime regulations. Andreas Nordset is the Director General of the Danish Maritime Authority. He spoke to Joy Business after the signing ceremony.
I wouldn't say it's big mistakes, but you know, when two countries are going to work together on practical issues, sometimes you find out, have we discussed and found out technical details, so when you're also implementing even information technology, so it's practical issues that we have learned from, and when we're moving ahead, we will be performing even better. I think that even also before we came, I think that there's a very strong ambition, which we have been impressed by, and why it's also we have found that Ghana Maritime Authority is definitely the right partner for us, because we share the same visions on safety and security in the maritime domain, both looking at the ships that's visiting your ports, but also coastal-wise. So we share this, and I think that both Ghana and Denmark have become even more firm on this, and we have gained, both of us, on taking this ambition to higher levels, and I think that we will pursue that also in the next phase.
Let's also hear from Ghana's Minister of Transport, who spoke after the signing ceremony.
About 6 months ago, we decided to go into the second phase of this important program, and the Director General of the Danish Maritime Authority has flown from Denmark to be here to perform this simple but important function. Let me also use this opportunity to introduce to you the new Director General of Ghana Maritime Authority. His name is Lawyer Kofi Alozi. Kofi, can you get up for them to recognize you? My common plea to you is that we need to come together, because the marine waters may belong to our authorities. It is true. But like I've always been telling that, about 80% of the business being done on the marine, we do not control them. It comes from us. And I think it's important that on the basis of that, we all come together and see how you can protect the industry.
Now, cocoa farmers in Ghana are being advised to grow shady trees on their farms to protect it from the impact of climate change. Now, there's an advocacy for the no-till farming to be able to maintain the fertility of cocoa lands and to increase yield appropriately. Last year, many farmers complained about major losses which resulted in Ghana and were unable to meet the local annual target of 1 million metric tons. Senior Programs Officer at Solidaridad West Africa, Edward Yauchere, highlighted smart farming practices when he spoke with Prince Appiah in an interview.
Ghana is known for its glories in cocoa production. And as we being part of the global community, definitely the implications of climate change and the impacts on the productions of cocoa, we cannot take ourselves out. This is why farmers are complaining, or farmers are getting the results of climate change impact on their production. What we need to do and what is being done, proven, is for farmers to adopt a climate smart production. And this system is working that you need to understand the time frames of operations. You need to do as much as possible to conserve water in the area of your cocoa cultivation. And you need to make sure that the investment you are putting in is in a stepwise manner. You don't just do things anyhow. Because nowadays cocoa cultivation or cocoa farming is a business, and it's as science as you are learning biology. So you need to understand the dynamics. Farmers will have to appreciate that the climate is changing and the impact is clear for everybody to see.
All right, so it's a Monday today and time now to go to the stock market to get some updates of how the market will look like this week and how it fared last week. And we've been joined by researcher from Data Bank, Adam Boku, via Skype to tell us more. Adam, if you're here, what's the update for the week?
Good afternoon, Emmanuel. So the Ghana Stock Exchange trading activity remained dull this week. We've seen only about 1.1 million Ghana cedi trade this week, which increased the loss on the Ghana Stock Exchange's composite index to 5.12%. The DSI 20 index, which also measures the top 20 stocks on the Ghana Stock Exchange, increased its year-to-date loss to 6.3%. Also, we've seen 9 price changes on the best last week, with 3 gainers and 6 laggards. The gainers for the week were Trust Bank, which gained 3 pesewas to 23 Ghana pesewas. Cow Bank, which gained 1 pesewa to 1 cedis, 4 pesewas. EcoBank Transnational, which gained 1 pesewa to 16 Ghana pesewas. On the laggards chart, we've seen Standard Chartered Bank losing 1 cedi to 20 Ghana cedis. Benzo Oil Palm Plantation losing 76 pesewas to 4 cedis, 12 pesewas. Enterprise Group losing 14 pesewas to 2 cedis, 10 pesewas. In a pesewa to 40 Ghana pesewas. EcoBank Ghana losing 1 pesewa to 73 pesewas, and Total Petroleum losing 1 pesewa to 5 cedis, 9 pesewas.
All right, so what stocks should investors be looking at this week?
Well, we are looking at Enterprise Group Bank shares to dip this week as some selling pressures remain on the best. Also, we are looking at EcoBank Ghana and MTN Ghana gaining some pressure on the best. We should push the Ghana Stock Exchange's composite index and financial stocks index upward.
Now, on the currency market, we saw the cedi pick up impressively last week against the dollar and some other international trading currencies. Now, what should be the outlook this week? Do we expect some more appreciation of the cedi over against the dollar?
Well, like you said, there was some sharp appreciation of the Ghana cedi against the US dollar on projected, on FX inflows that we are expecting as a result of the successful Euro issuance last week. Now, whilst the proceeds haven't yet hit the accounts, there was a news that filtered through the markets, which triggered regulators to sell off or unwind their US dollar positions. Now, going into next week, we are seeing further scope for a further recovery of the US, of the Ghana cedi, towards its year open practice of around 5 cedi levels.
All right, many thanks for your time. Eden Poku is a researcher at Data Bank. He was filling us in on the stock markets, the outlook for this week, and of course what to expect this week by way of trading and of course the currencies. And on that note, we wrap up this afternoon's edition of The Marketplace. It's been great having you on board. My name is Emmanuel Abuaji. We are free. Let's meet same time again tomorrow for more interesting developments in the world of business. Have a good afternoon.